Good morning, everyone. We've got PCE coming up here. Just about 18 minutes. We'll be covering that live in the market reaction across a number of different asset classes and stocks.
S&P futures up 0.7%, 51.20.25. Crude up 1% at 84.43. Bitcoin down 0.4% at 64,960.
This morning, we've got markets bid up after the positive earnings reaction and overall great results in conference calls from Microsoft and Google, a stark contrast to what we saw from Meta the day earlier. And we are awaiting PCE price data coming in. Year over year, the expectation is for 2.6%. Core is expected at 2.7%. Month over month core at 0.3%.
MOS Mosaic Company. Mosaic signs LOI to sell up to 100% interest in the Legion project. That report from yesterday, Mike Oscar Sandy, MOS.
Ahead of PCE, S&P futures trading at about 51.20. With an implied open here up about 0.78% on the S&P 500 and 1.07% on the NASDAQ 100 ahead of PCE. Overnight, we've got oil bid up to 84.37, gold bid up to 23.57, silver bid up to 27.61. Dollar has a modest bid, and the yen is rolling over this morning. Copper continues to zoom higher now, trading at 4.5865, outperforming both gold and silver year to date. We'll also get the ExxonMobil earnings call at 8:30, University of Michigan sentiment final at 10 a.m., which will include 1- and 5-year inflation expectations. Let's take a look at the rates market ahead of PCE here. We have the 10-year note on screen. Not too much overnight action here. Coming into this, 10 years have a modest bid, as do 30s. Taking a look at oil. Oil has had a nice bid over the last several hours, rising up.
At 8:30 a.m. Eastern Time, we get USPC price index year on year forecast 2.6% on the prior 2.5%, with a range of 2.8% to 2.6%. USPC price index month over month forecast at 0.3% on the prior 0.3%, with a range of 0.4% to 0.2%. US core PCE price index year on year forecast 2.7% on the prior 2.8%, with a range of 2.9% to 2.7%. US core PCE price index month on month forecast 0.3%
Coming up in
on the
less than
prior
10 minutes, the core
0.3%,
PCE price
with a range
index.
of 0.4% to 0.2%. US consumer spending month over month forecast 0.6% on the prior 0.8%, with a range of 1% to 0.4%. US real personal consumption month on month forecast 0.5% on the prior 0.4%, and US personal income month over month forecast 0.3% on the prior 0.3%.
So crude bid up pretty well overnight here, up
So
just
ahead of this
about
data
60
release,
cents.
just noting the S&P 500 is down around 0.25%.
Copper, as we talked about earlier, overall on a positive trajectory overnight, consolidating some of those gains. Gold ahead of PCE, bid modestly, giving a little bit of that up over the last hour, though. We can see that peaking overnight around 23.64 and then moving back towards these lower areas where price seems to have a decent amount of demand. Silver trading at 27.54 here ahead of PCE, also showing that same sign, just rolling over a little bit ahead of it, but overall bid. And the euro, which is sort of the anti-dollar as it makes up 70% of the US dollar index, also rolling over a bit from its overnight highs. And two stocks that we'll be watching pretty closely today, Google and Microsoft. Google still pretty well bid here ahead of the open. Google up 11.39% ahead of the open here, trading at 173.80. And Microsoft bid up 3.97% to $414.72 ahead of the open here and ahead of PCE. We're going to move back to the S&P. We've got just about 7 minutes left until we get PCE data. Base case here, based on my outlook, is that we're probably going to see a reaction to a more meaningful deviation. That is to say, I don't expect too much of a reaction if things come in line. I think that'll be somewhat of a non-event. What I would really be looking for is a hotter expected print causing rates up, risk off, or a cooler than expected print causing rates down, risk on. Ahead of this data release, skew has risen, but not much. So this is still not a particularly well hedged market. So if you do get these outliers, these events where things come in and they are not favorable to stocks, you do still have room for them to sell down because you don't have people well hedged into this environment. That is to say, they don't have
PCE numbers while earnings remain at center stage. The focus today will also be on US data, with the Fed's preferred measure of inflation of particular interest this morning, coming out in just around 6 minutes time.
Personally, I like to call it their favorite flavor of inflation.
Seeing a report from Bloomberg, the activist investor Elliott builds a $1 billion Anglo-American stake. That report from Bloomberg.
At 8:30 a.m. Eastern Time, we get US PCE price index year-on-year forecast 2.6% on the prior 2.5%, with a range of 2.8% to 2.6%. US PCE price index month-over-month forecast 0.3% on the prior 0.3%, with a range of 0.4% to 0.2%. US core PCE price index year-on-year forecast 2.7% on the prior 2.8%, with a range of 2.9% to 2.7%. US core PCE price index month-over-month forecast 0.3% on the prior 0.3%, with a range of 0.4% to 0.2%. US consumer spending month-over-month forecast 0.6% on the prior 0.8%, with a range of 1% to 0.4%. US real personal consumption month-over-month forecast 0.5% on the prior 0.4%, and US personal income month-over-month forecast 0.3% on the prior 0.3%.
Somewhat sleepy session ahead of the data drop coming out in just about 3 minutes here. ExxonMobil earnings came in softer than expected on refining margins and natural gas prices. Those earnings were 206 EPS versus an estimate of 219 and revenue of 83.08 billion versus an estimate of 80.26 billion. Mixed results. Chevron came in better than
TSLA,
expected
Tesla
overall.
shares moving lower, below the 170 level now for Tango Sandy Lima Alpha, TSLA.
Chevron was a beat, but didn't give.
Shares of Meta also reaching new lows.
So shares of Chevron this morning, just under a little bit of pressure, just down about 0.5%. They beat on earnings but missed on revenue, attributing that also to natural gas prices. Their EPS came in at 293 versus an estimate of 290. That's adjusted. GAAP at 297 versus 284, or non-GAAP, and then revenue at 48.72 billion versus an estimate of 49.17 billion. PCE data coming out in just over a minute. And we'll switch our view over here to the 10-year note for a moment. You can see in all these, by the way, look at, there's no liquidity, okay? This is why you got to be careful trading these. Liquidity just vanishes ahead of the event. So there's no one there to catch you if you fall, if you need to stop out, etc., right? Or if you want to take profit. Like either way, you can kind of get trapped in the gap. So be careful trading these events. We'll watch the data, we'll parse it, we'll see what it may mean for the markets as it comes out.
Percent, 2.7% higher than forecast, 2.6%. PCE price index month over month, 0.3%,
Personal
0.3%
spending month
as
over month for March,
expected.
0.8.
PCE price index, core PCE price index year on year, 2.8%, 2.8% higher than forecast, 2.7%. Core PCE price index month over month, 0.3%, 0.3% as expected. Seeing US consumer spending month over month, 0.8%, 0.8% higher than forecast, 0.6%. Personal income month over month, 0.5%, 0.5% as expected. US real personal consumption month over month, 0.5%, 0.5% higher than forecast, 0.3%. Seeing some upside in the S&P.
Data coming in relatively in line, essentially a non-event for the market. We're going to shift over to S&P. It's got a pretty big bid here. So this is, this is a pretty bullish reaction. You've got liquidity building above, you have rates coming down, and you have PCE coming in relatively in line versus what expectations were. So overall, the initial reaction is positive here, and certainly it doesn't give us the same sense as what we saw with quarter over quarter PCE, which gave us a meaningfully hotter reading. Consumer spending also came in better than expected month over month at 0.8% versus a forecast of 0.6%. So the initial reaction is rates down, risk up, but we are seeing S&P futures just giving back a little bit of that initial pop. And remember, this pop often happens in an environment that's not very liquid, so it can be a little bit deceiving, that initial move. And we are seeing some more of that being given back here. I'm going to actually go into the report here and take a look at exactly what all the moving parts are. So give me a moment to parse that.
EAK, Takeda receives positive CHMP opinion and previously treated metastatic colorectal cancer drug. That's Tango Alpha Kilo, TAK. BDRX. Biodexa enters into exclusive license to eRAPA, a phase 3 ready asset for the treatment of familial endometritis
Going back,
polyopis. That's Bravo Delta Romeo X-ray, BDRX.
going back to 10-year note futures, you can see
So
they had that
European
initial
bond yields
gap up
extend fall
and are
slightly after
dropping.
US data. Germany's 10-year bond
ALLO,
yield down 3
Allogene,
spots 7
awarded a
basis
grant from the
points.
California
Last at
Institute in
2.587%,
Regenerative Medicine.
has been down 2.5 basis points. And the dollar slightly pairs gains versus the yen after US inflation data, last up 0.8% at 156.8. Traders of US rate futures contracts price in firmer chance the Fed will deliver the first rate cut in September.
So I'm going to read some highlights from the Bureau of Economic Analysis report. The 169 billion increase in current dollar PCE in March reflected an increase of 80.6 billion in spending for services and an 80.3 billion increase in spending for goods. Within services, the largest contributors to the increase were healthcare, both outpatient and hospital services, and housing and utilities, led by housing. Within goods, the largest contributors to the increase were gasoline and other energy goods, led by motor vehicle fuels, lubricants, and fluids, and other non-durable goods, led by recreational items and food and beverages. From the preceding month, the PCE price index for March increased 0.3%, prices for services increased 0.4%, and prices for goods increased just 0.1%. Food prices decreased less than 0.1%, and energy prices increased 1.2%. Excluding food and energy, core PCE price index increased by 0.3%. For the same month 1 year ago, the PCE price index for March increased 2.7%. Prices for services increased 4%, and prices for goods increased 0.1%. Food prices increased 1.5%, and energy prices increased 2.6%. Excluding food and energy, core PCE prices rose 2.8% from 1 year ago. So overall, nothing too terribly surprising in this report. A bit different than what we saw in quarter-over-quarter PCE that gave the market a bit of a jolt yesterday in the first part of the trading session. This is quite a bit more tame in terms of the data. A little bit hotter than expected, but relatively in line. And so the market reaction initially was positive, but we are starting to give some of that back. And you can see that in the order book here in this heat map. Before PCE, there was liquidity, and then right up to about, let's call it a minute, 40 seconds, almost all of that dropped out. We had this one area of resting liquidity. We went up, we filled that, and then we've kind of been pushing lower as liquidity has come back onto the order book. Often is the case when you have these type of events, you have a sort of head fake, and then, and that head fake is exaggerated by that lack of liquidity, because obviously if there's not a lot of bids and offers, then price is going to move more, and this was a pretty gappy move. You can zoom in and really see just how gappy that was. I mean, it was pretty much just sort of this up and away. And so we are starting to give some of that back. That's not too uncommon with these data releases, particularly when they happen in the context of, you know, getting that gap move and then having to sort of reset the gap. So prices come down to this VWAP level, which is weighted with the overnight pricing that we've seen where transacting has happened. And we've tested that VWAP twice. We're starting to bounce above it. We do have a wall of calls up above us that could act as potential resistance and seems to have acted as resistance earlier. And we also have liquidity building above us ahead of the open here, which is typically pretty constructive, but it is a whole lot of liquidity. So it does put the onus of demand on buyers to prove they have what it takes. They have the ample ammo to push up through these levels. If we do get all the way through them, we will push back into positive gamma territory per our model. And that would suggest that we see some of that intraday realized vol diminish. On the other side of this, you know, there wasn't a lot of hedging to take off because this wasn't a particularly well-hedged market into this event. So that's another reason you may see this pop fading a little bit reflexively. That same impulse to cover hedges and add liquidity into the market does not exist. Let's go check on the NASDAQ here. Quite volatile and giving back a lot of those gains as well. Sort of a similar look as the S&P. You saw the liquidity kind of disappear. It came up and filled an offer at a higher level. And we've been selling down now, just sort of finding some support at VWAP. Russell 2000 of the three really looks the best. It's holding on to some of those gains. And 10-year note futures right now trying to hold on to their gains as well. So it kind of makes sense to see the Russell hold those gains and the 10-year hold those gains. We know how rate sensitive that small cap index is. Gold had a good little pop here as we saw real rates dropping and the dollar coming down a bit. And I was talking about this on the Traderade Discord. One of the members asked, what do you expect from PCE? And I thought, you know, if PCE comes in kind of in line or lower, especially cooler, it's going to be one of those situations where you got to watch the reaction in rates. And if real rates come down, gold could get bid, and real rates are certainly coming down and gold's getting that bid. Silver also getting a bit of a bid here, trading at 27.65. And crude oil coming down just a little bit, actually. Seems like it wants to rebalance around this point of control. Let's take a look at some of the majors ahead of the open today. We've got Google 174.09 ahead of the open. Had a big pop on PCE, giving some of that back. Microsoft, similar look. Pop on PCE, giving some of that back. Take a look at NVIDIA ahead of the open. Same look, pop on PCE, took out a large level of resting liquidity, actually two of them above, now rolling over a little bit ahead of the open. So we did see data that was not terribly out of line with what we would have expected. I think that the reaction here overall makes sense. There was not a lot of liquidity in this market. We can see that the order book dried up quite a lot ahead of the data release and into the data release, which exaggerates the reaction. And so far, this looks like initially just a bit of a head fake. We filled these larger areas of resting offers above, and then we're coming back and sort of rebalancing here at the point of control in VWAP on the S&P. And we have a similar look here in the NASDAQ. NASDAQ just a little bit weaker. We can see some of those leading stocks like Microsoft, Google, NVIDIA, and otherwise kind of mirroring this move, this pop, this illiquid pop, and then a drop following it. So that's one of the risks of trading these event volatility catalysts as well, is the moves tend to be pretty quick. They tend to happen in a bit of a liquidity vacuum, and you're not necessarily going to get the fills you want, particularly if you're trading any kind of size. And overall, the data came in relatively in line, a little warmer than expected, but it's all about the reaction, isn't it? And we could see rates came down across a number of different maturities, and that's helping to give a bid to precious metals, to industrial metals on that print. And so it's really going to be a story of real rates for gold and silver today. I think the data is supportive of precious metals moving higher as well. Precious metals tend to like an environment where real rates are not rising and are not too high, and we are currently in that environment. So going back through PCE, overall, this increase was supported by healthcare, housing, and utilities on the services side, gasoline and other energy goods, and non-durable goods like recreational items and food and beverages on the goods side. So it's a total increase of 160.9 billion divided evenly between goods and services. And interesting to see goods starting to come back here as a part of the inflation picture. But overall, again, not very hot data, a pretty big contrast to what we saw with the quarter-over-quarter PCE release yesterday that came in at 3.7%. So we can see the market continuing to digest that data. Again, it had that initial
HRTG
impulse
Heritage
higher,
Insurance files up to $100 million mixed securities shelf.
and that
That's
initial move
Hotel
was
Romeo
met.
Tango Golf, HRTG.
That initial move was met with some selling pressure as liquidity started to come back on the books. You got to watch out for that initial head fake in these moves. It is quite a common theme. And it's interesting because in the PCE data, the largest contributors are similar to what we saw in the largest contributors of consumption for GDP yesterday, which were things like healthcare, medical insurance, and financial costs. And those aren't necessarily what you want to see as the largest contributors to consumption. It doesn't suggest the consumer is spending on the things that they want to spend on. It also suggests that those things are rising faster than perhaps the rate that inflation is calculating them, or that PCE is deflating them out of real GDP. So I think yesterday's GDP print was a bit disconcerting for the economy. It was the slowest growth print we've seen in some time. And what was driving the growth were things that weren't that great. I mentioned the consumer areas, medical costs, insurance, financial services. There was also state and government employee wage increases that drove that GDP increase. There was a drop of inventory building due to a slowdown in business. And a lot of the residential and non-residential fixed investment increases were from broker commissions and transfers. So again, a bit weaker than what I would have liked to see. But now we're seeing some inflation data that start to tell us a little bit why, at least for what happened during the month of March. And that is that consumers are really spending more on what they have to rather than what they want to in a lot of the services areas. And on the goods areas, the largest contributors were gasoline and other energy goods. And then outside of that, other non-durables like recreational food and beverages. So again, this isn't necessarily a sign of a robust consumer. I think the top 25% of the top quartile are doing well. The bottom 50% are still struggling. I posted a chart the other day. It got picked up by a couple of other publications about the amount of credit card interest and the amount of credit card debt that Americans have. And it's both near record levels, if not at record levels, depending on where you look. And that's another sign of those bottom 50% spending more to get less, and it's going beyond their budget, so they're putting more on their credit cards. And folks, if you have any questions about anything that I'm talking about here or otherwise, any stocks you want me to look at, especially as we get closer to the open, let me know. This is all about the community, so I'm always happy to, take a look at other things as well, other charts, other economic data, other themes, trends, all that. We are seeing some selling pressure increase here in futures, actually cutting below where we were, or just almost below where we were before PCE. Let's see what's happening in the NASDAQ. It is a similar look in the NASDAQ as well. Closer to the bottom end of that range that we saw. Rates starting to come up a little bit here. 10-year note futures actually filling that gap up we had into PCE. That was a bit exhaustive. If you look at the top of that gap, we can see there's 1,565 contracts stopped out as buys. That's a little bit of an exhaustive move, so they typically reverse from there, and certainly overall we have. Take a look at gold here. Gold also reversing lower as we see rates rising and that PCE reaction flipping the other way. Been asked what Snap looks like, so we will put that on screen. Surprisingly, it was one of the times it reported earnings and did not crash, so that was a surprise. We'll give it a moment to backfill that data, and we'll clean up that chart. Here's Snap on screen. Trading at 14.25 pre-market. And we'll pull this back because we backfilled this about 12 hours, so we can go all the way back to the pre-market open. Seems like it's all a little bit of pressure, starting to see that pressure relief, but overall it's implied to open at 14.25. So let's look at this chart real quick for Snap. This is an interesting chart on the longer time frame. We're going to just pop this up into TradingView. So this is what I'm looking at with Snap. You've got this big gap to fill here from the last earnings. This is the theme with this stock. It tends to crash on earnings. So what I'd really like to see is this gap filled all the way back up to about 15.51. I think that's where, if one is long Snap, it's a decent place to take off core position and only have runners on, because this has been quite a significant move. We're getting back to an area of supply. So I wouldn't want to necessarily be aggressively long. I'd probably take off 2/3 of my position, take some profit there, and look for the next opportunity for that core. And then for runners, I'd look at defending them with a short-term moving average, maybe like a 8-day EMA or a 20-day SMA. So let me know if that's helpful on Snap. Meta, I've been requested to look at Meta. Let's do that. Here we go. Meta on screen. Okay. This one, yesterday it impressed me. I was really expecting it to fill that gap lower to 403.14. It did it in the overnight session. Is that enough? We'll see how it plays out. I still think there's a chance it could. This is a really volatile area. This area of the volume profile, if you go back in time on the stock, this had never transacted at that level before. Okay, so there's really no sort of muscle memory. You can see the prior highs capped us out around 379, 380. So that transacting that we had there starting post earnings is really the first time it's ever transacted in that price range. That's what we like to call a decision zone. The reason we call it that is the market's got to make a decision. It's either going to push below this gap or push above this gap. Often is the case the gap fills lower. So I'm still more inclined to think 403.14 is something we see on Meta before it might resume its uptrend. But, you know, yesterday the stock was well defended, and it's implied to open here just around 441.11. So let's see what the price action tells us today. But the other, you know, sort of side of the scenario is, and we can readjust this arrow here because now we're seeing price down here, right? So we either get down there, or if bulls get real violent, you know, we could take this right back up to the other side of this, right? Right back up into this chunky area of volume profile. Now, I will say we are below the Ichimoku cloud on Meta, and if we subscribe to that theory, this is a volume-weighted cloud. In case it looks a little different, I like to use that because it adds a little more context. But if we do kind of continue below this cloud, the cloud is telling us we're in a downtrend, and the path of least resistance would be lower. So really need to see the price of the stock kind of push back into the cloud, maybe get back up to this point of control to say that downward pressure has been neutralized. So right now, Meta is kind of at an inflection point. It can go either way. We need to let the market tell us what price wants to do. But the upside looks like it could be a bit chunkier than the downside based on the move that we've seen so far. So hopefully that helps. Jim, that's a great question about the divergence between what we saw in terms of quarterly PCE and today's month-over-month core PCE. I think that this is something that we've seen in the past with that divergence. So it is, I think, one reason that the quarterly PCE isn't necessarily given the same level of attention, because I think it's a little bit noisier. And that quarterly PCE, that Q over Q, tends to be how they deflate GDP, right? So I think that's another thing to take into consideration. But what we saw from PCE data was that what people were spending on were not things that they necessarily want to spend more money on. Medical services, you know, healthcare costs, insurance, things like that, and also on energy and food and beverages. So I would just look at this with the with a little bit of side eye, I guess, and basically say, you know, this is not exactly encouraging data for the economy coming off GDP, where it was also led higher by consumer spending on medical costs, insurance, and financial services. And those are often understated in PCE in terms of their contribution, and yet they were some of the biggest contributors this time around. So what does that really tell me? It tells me that with homeowners insurance going up anywhere between 40 and 80%, with auto insurance going up anywhere between 25 and 40%, and with healthcare insurance going up 20, 30%. All of that tells me people are paying a lot more for this type of stuff, as well as healthcare costs and other related costs than they want to. And that's constraining their spending in other areas and boosting their credit card bills. So I think the divergence has more to do with BEA's calculation methods. But we still did get PCE that was a bit warmer than expected, largely in line. And I think the initial reaction may have been just a little bit of a head fake there. So we'll be watching this as we get into the trading day to see how this all plays out. All right, so I've been asked to look at Tesla and SQQQ. So give me a moment. We'll pull all those on screen here. So first, we do have Tesla in Bookmap here. So we'll pop that up first. Okay. So we can see that sellers have dragged this point of control lower. VWAP is sliding lower. We seem to be getting some resistance around this 169 level. We have a large area of offered liquidity below us at 167, 166, and 165. It looks like the path of least resistance is lower, as you can see sellers getting these orders filled. You know, these push belows, all these resting bids are getting filled. That means there's plenty of supply from the sell side. So let's watch the point of control and VWAP during the trading session But I'd say this thing could come under pressure because the reaction to the earnings call, which quite frankly was abysmal. I mean, that earnings call was nonsense. There was so much discussed during that earnings call that makes no sense at all, including like, we're going to make an AWS cloud competitor with our car computers. There's so many logistical reasons as to why that would be problematic in terms of reliability of connectivity, compute accessibility, power, the consent needed from customers, the security implications of letting other people use your compute, the host escape bugs that could cause these cars to be compromised. I'd be a little concerned about it. Now, in terms of Tesla on a longer term chart, we can see that it's still struggling below its point of control. So sellers still are in favor here. And it isn't a pretty well-defined downtrend, right? We get a bid back, this reflexive bid back from the lower end of the downtrend. So, that's an area where buyers are able to defend this. But from there, we're still below the cloud, right? We're still below the point of control. And I think that as long as those factors remain true and we haven't made a higher high or a higher low, in fact, it's been lower high, lower low, lower high, lower low. If this ends up being another lower high, we're still in that downtrend. So I think the path of least resistance likely to remain lower for Tesla. And it's a show me story. Management made a lot of very big promises. Now they have to prove they have the capacity to fulfill really any of them. All right, so let's take a look here at SQQQ. We're just going to put this up on the trading view chart here. Okay. So, this is obviously
Fed funds rate 5.33% April 25th, unchanged from April 24th.
This is obviously a inverse ETF, right? Triple inverse, the NASDAQ. And so we have to kind of look at it with just a little bit of side eye because these leveraged ETFs have somewhat different technicals, right? But what I would say is with what we're seeing with this ETF, it is breaking out of its downtrend, right? So if we're just looking at it just strictly technical and not factoring for it being inverted and all this other stuff and leveraged, it is above the point of control. It is above the cloud. It is in an uptrend. And it looks like it's making a higher low. So we got to see if it makes that higher high to continue that positive trend structure. But so far, it looks reasonably decent. Of course, the implied open here is not great. That's 1144, which is going to put this whole sort of trend structure in question. So if we isolate it and just look at yesterday, it looks okay.
ISUN, ISUN shares resuming trade.
But if we look
as
at it
well as ATXI and ZVSA.
But if we look at it with the context of where we're implied to open here around 1140, that starts to make the chart look a little less ideal, right? Because that puts us back into...
Matterport is canceling their Q1 conference call.
That sounds great. So that would put us back into the cloud. And
agreement to be acquired by CoStar Group. That's Mike Tango Tango Romeo, MTTR.
That would put us back in the cloud on SQQQ, which would put us into a trendless state, right? And make it more likely that this point of control becomes a little bit more magnetic for price. So I'd say as of yesterday's close, SQQQ looked decent, but provided that we open the way that this is implying, it's not going to look quite as good. Obviously, we need to see how we close today. Anything can happen, but the implied open takes a little bit of the upside case away from this one. So hopefully that's helpful to you. Have a look at Palantir. Sure, I'd be happy to. It's a stock I've been involved with for a long time. We're going to also pop this one on a longer term chart, and I'll show you what I'm looking at here and why I'm looking at it. All right, so Palantir, first of all, I'll just say this is one of the few real AI players in the space. So there's a lot of companies that claim to do AI like C3 AI or SoundHound or others. But I think Palantir actually is a real AI company. So some of the gains they've had, I believe, are real. And I think the story has changed in this company. Folks are assuming it's a consultancy or a government contractor. They are executing in the commercial space. They're growing those contracts well. Their sales and marketing team is actually doing quite well overall. They built that sales and marketing team out in August of 2022, and the rest of big tech was firing. They were hiring. So that's also another thing I liked. But the chart I can't say I like it right now. Okay. I think we've got room down to about 1867, kind of filling this gap back up to this layer of where we might see a rebid. It's also a decision zone based on this low volume node. So I think that's an area where I would look for buyers to start trying to defend this thing. And if we fail that area, I'd be looking at the point of control as a lower area of support around 1750. Now we do have an implied open of 2247 on this. That's going to bring us right into the bottom of the cloud. So the other scenario is if we break into the cloud and we're able to neutralize that downtrend, we could start to see this push higher. And it's going to be very important to see if we're able to break above these key supply levels on Palantir. So I think the earnings from Microsoft and Google and all the positive mentions of AI kind of undoing the damage Meta did, that's going to be helpful for this stock in the trading day. We need to see if we can neutralize the downtrend and close in the cloud. If we can't, then I think the path of least resistance is lower. So this is another one that's kind of at this inflection point. We need to see how it trades and how it closes out the week. Let me know if that's helpful for Palantir. And guys, if you have any questions about any other charts, stocks, futures, bonds, Forex, commodities, whatever's on your mind, let me know. I'll chart it out. Now, an update on some of the areas that I remain constructive on in the market. I'm still bullish on energy. I'm still bullish on materials, metals, and mining. Those are areas, industrials, all that. I'm also still bullish on aerospace and defense because of rising geopolitical tensions and defense spending. And I'm still constructive on utilities over the long term due to the increased transmission and generative requirements because of manufacturing coming back, AI, data center growth, and of course, EV charging. I've been asked to look at copper, so give me a moment and I'll add copper here. So first things first, we'll just look at the liquidity as we get into the cash trading session. So we have copper on screen here. Copper is up about 1.25% pre-market. It's had an absolutely stellar run. It's up more than gold and silver this year so far. So you've got to give credit where
SGD
it's
Safe
due.
and Green Development executes contract to sell Lago Vista site. That's Sandy Gulf Delta, SGD.
Got to give credit where it's due. The dynamics behind what's happening with copper are quite bullish. You have increasing demand. We just talked about generation capacity and transmission capacity. How are you going to transmit electricity? Over copper, right? Some lines are aluminum, most are copper. That adds to demand. EV construction, EV sales are increasing globally. That adds to copper demand. Data center growth, that adds to copper demand. Electrification of areas and frontier markets, that adds to copper demand. There's a lot of things that are positive for copper right now on the demand side. On the supply side, you don't have enough production or exploration, and we have a deficit in terms of how much we're producing versus how much we're using, and that deficit is growing. So copper has room to the upside from a supply-demand macro case. But looking at the prices here, the next area that I'm targeting as a potential upside target would be 4.675, and I'm looking at support at 4.4525. Okay, so overall path of least resistance is higher. We're well above the point of control in Ichimoku Cloud, saying that we are in an uptrend. This is a pretty solid, well-defined uptrend, and it seems to be relatively well behaved. That is to say, when we get to these lower areas, initially it was rebid. Now we're getting to the higher areas of this trend, so I wouldn't be too surprised if we're going to kind of have this channel ascent, that maybe we start to see just a little bit of resistance into some of these higher areas, this sort of perfect 45-degree angle ascent. We see this in a lot of different assets. And often when you get to that top area, you start to see just a little bit of offering, a little bit more selling pressure. Nevertheless, this channel could take us up to that 4.675 area, and that would be another proving ground for copper to show us whether it has what it takes to move higher. And this is a really big breakout for copper. This is an area I've been covering.
From Wall Street Journal's Nick Timoreos says that the March report doesn't change the overall picture of inflation progress having stalled and undercutting the start of the year bump in the road story.
That's the Fed whisperer for you. Nikki Leaks telling us
Wall
that
Street
the outlook
Journal's
hasn't
Nick
changed.
Timiraos also knows that the Fed is becoming less confident at a time it was hoping to gain confidence.
So I would say with copper, this major breakout is one to keep an eye on. This is after a multi-year consolidation. And the way I like to look at it is the longer something goes sideways, the bigger it's going to move when it decides to move. It's like a spring coiling up and that energy being released. So I still think that energy exists in copper up to 4.675. That's where I'd probably take off some core positions and let runners go from there, guarding them with the 50-day moving average. So let me know if that helps for copper. Thoughts on China and emerging markets. Okay, let's take a look here. And I'm going to pull this up on TradingView, and we're going to look at the MCHI ETF. And we're going to zoom this out to a weekly chart.
We have posted the Wall Street Journal piece on the feed for all those interested.
So MCHI is starting to look more constructive. It's no longer in a defined downtrend, right? That series of lower highs and lower lows certainly over. Now we're starting to consolidate. I wouldn't necessarily call it an uptrend yet. We are below the cloud. We're below this multi-year point of control. I do want to see us get above both before I say, okay, it's kind of time to go off to the races. So from a technical perspective, I'd say we're more in an area of decision on this chart than an area of resolution. And, that kind of is going back also to the macro picture in China. And I think that, when I look at these things, these longer term swing trade opportunities, I do like to combine momentum and macro. That's where I find I get the best results over time, when they both are showing me similar things. Momentum in China is kind of neutral here. On a longer term chart, we're just sort of in this area of consolidation. We are below the cloud and the point of control, which suggests that sellers have some advantage overall on this longer time frame. If we zoom in a bit, it's a bit of a different picture. We're finally starting to push above the cloud, and we're finally starting to push above that point of control. So short-term trend is starting to look more bullish, right? In terms of the country's overall macro dynamics, I'm still concerned that economic growth, this rebound, hasn't really come to fruition the way we'd like to see. There's still a lot of trouble in the real estate market, a lot of developers still at risk of default. And so the way I would look at China, and the way we talked about China at Macrovisor, is short-term pops, stocks like Pinduoduo, they still seem attractive, but longer-term investments in China, I'm still leery of, because I don't think they're out of the woods, and they haven't done enough to address this insolvency issue in local government funding vehicles and in, in the developers and their larger banks' balance sheets. So I'd say China offers opportunity for nimble swing traders, but for investors, I still look at it as a hands-off area. For other emerging markets, though, I like buying the dips in Vietnam. I like buying the dips in Philippines. I like getting long Mexico and India. Those are areas where I'm still very bullish on emerging markets. USD JPY. Oh, this is a fun one. And let me know if that was helpful for China and emerging markets for you. And I got some other charts. We got a lot of requests for charts here, so I'll get to everyone, I promise. And keep plugging away. Anything you want me to look at, I'm happy to do it. This is a lot of fun for me too. I love looking at charts. So here is USD JPY. I've marked out 158.33 as kind of an upside level, where I would be looking at probably taking this position off. And we do run increasing risk of some potential intervention, but remember, these interventions are generally ephemeral in nature. So when you get an intervention, it typically does not last very long, the effect. Last time the Ministry of Finance did an intervention, it took 3 times before the trend in the yen finally reversed higher. And there were other larger, tailwinds that kind of led that to happen. It wasn't just their intervention. So I would say the intervention, if you want to call it that, that risk is real. That will add some turbulence here. But what we're hearing from the Bank of Japan overall is still more dovish overall, right? So the context here is, yes, they hiked from negative rates to 0 rates. Great. But now they're saying they're going to keep stimulating and keep things relatively easy for the indefinite future, until they're able to realize some of these inflation goals that they have. So I would think that with the yen, it has room to move lower. I would be cautious here with position size just because intervention risk is on the rise. And the real thing that's going to make the yen bottom out here is more likely to be a more sizable shift in policy from the Bank of Japan, and they keep telling us otherwise. So can it really hit 170? Yeah, it can. It's a bumpy path there for sure. Let's zoom out a little bit more. We're probably going to have to zoom out even more than that. It's a weekly chart. Let's go to a monthly chart. And let's like pull this way back. Let's see how, yeah, there we go. Look at that. So, I mean, where's the yen been in the past? Look at 260 back in the 80s. So does it have room to materially weaken from here? Yes. What is the line in the sand for that? It's that 158.33 level. You can see that was sort of the top of this range that we've been in going back to the early 90s. And I think if we pierce the top of that range meaningfully, then yeah, you have a lot of room for the yen to fall, right? This is the dollar versus the yen. So the higher it goes, the lower the yen's going. So that's why I marked off that area kind of going all the way back here. I'd say that the path of least resistance for the yen, unfortunately, for Japan remains lower. It's probably positive for Japanese equities overall, however, because you're getting this impression from the Bank of Japan. They're just going to keep stimulating, and they're nowhere near done. With that in mind, I don't mind owning the Nikkei, but I want to own it with currency hedging, right? I don't want to own the Nikkei in Japanese yen. That sounds pretty scary, but I don't mind owning the Nikkei with a hedge. And so there is a hedged ETF for this. It's called HEWJ. And HEWJ gives you exposure to the Nikkei, but it hedges out the yen risk. So hopefully that's helpful. I know it's not exactly what you were looking for, but try to answer both where the yen could go and 170, certainly in the cards if we break above 158.33, but also there could be a bullish Nikkei trade setup there as well, with the Bank of Japan saying we're going to be easing for the foreseeable future. Let's get to some of the other charts that people have requested. We've got GDX, so we're going to get to that one first. That's the VanEck Senior Gold Miners chart. And we're just going to zoom this one in just a little bit more here. We'll go to multiple time frames, but overall, it's a lot like the gold chart. It's this steep ascent, right? Maybe getting a little too steep here. We're just challenging this really steep trend line from below after the gap down drop we had. I'd love to see it break above that. The pre-open level suggests that we will. We can see that's kind of pushing us above this trend line here. I still think high quality players in the gold space have room to the upside. So my macro view is streamers are going to be better than miners overall, but miners have a role to play here. The higher quality names like Newmont could be worth getting exposure to. I also like Royal Gold. I like Wheaton Precious Metals. I like Sand, Sandcorp, SAND. Actually met the CEO of that company several years back at a mining conference, and he runs a pretty decent streaming operation there as well. So I'd say with the way the market's implied to open, I think there's room for continuation for GDX to the upside. And if we look at this on a longer term chart, what would get me a little bit concerned is just that we do start to get to an area of supply overhead here, just around 34.77. This has been an area where this thing's had some trouble staying above that level. So we're getting closer to an area that's sort of like the proving ground for this ETF. Obviously, if we can move decisively above this level, we've got room to run, right? We've probably got room to run to about $40, which is a pretty decent bit of change to go to the upside. But right now, we've really got to see this thing break above the trend line on a closing weekly basis and see if we can make a push above 34.77 for additional upside. But I'm still bullish on the space. I like the way gold is trading as long as it's above its respective trend line as well. So we'll just pop onto that real quick. You can see that. This is a weekly chart. Let's pull it back to daily so we can see kind of what's going on there. So I still like gold here. I've been talking about rebidding it at the trend line. Now, I don't want it to keep knocking that trend line because the more it does, the less likely it is that it holds. But so far, it looks constructive, and it looks like we're set to revisit recent all-time highs. So that's my view on gold. Let me get to Coupang, CPNG. That's the next one I've been requested to look at. So it's trading at 23.03 with an implied open of 23.24. We are just about 12 minutes away from that opening bell. And so far, the trend on this one does look pretty promising. I have not been following the fundamentals on this. I do know a bit of the macro. They're a Korean-based company. They're largely targeting that area and trying to expand. I do like the overall trend health of this thing, although I would say if we're looking at this from the perspective of it being sort of this, ascent in an uptrend channel, we'll have to see exactly where that top of that channel lines up, right? Because it's starting to kind of look like we're playing with the top of the channel depending on where you define it. I like to have as many touches on these charts as I can to kind of, show that there's some degree of relevance for the way the market's interacting with it. So it's starting to look good building above this channel, but it could also be a little bit extended up here. I'd love to see how this thing trades, but I'd say path of least resistance for Coupang is higher in terms of where it can go. Let's zoom out, when in doubt, zoom out. So we do have some areas to look at in terms of prior price action. I think the area it's at right now, you could see that was an area where that was resistance that became support and then resistance again. So we do want to see a push above this 23.08 level. Again, the pre-market open implies that we will make that push. And then we've got another level just above that 24.85, which could be pretty important for the stock. You can see this thing had traded really as high as almost $70 in the past, and it's put in this really long-term complicated bottom. In the process of doing so, it's pushed above its weekly Ichimoku cloud and point of control, so that also gives you some optimism for trend health, but we have major resistance overhead. So we do need to push through this chunky resistance, and once we do, I think you've got a lot more room to the upside. So hopefully that's helpful for Coupang. Overall, trend health is constructive, but it has some work to do here. And then SOX S, the semiconductor Bear 3X ETF. I've been requested to look at that one. I would say this one is looking a little bit iffy. It had a push above this Ichimoku cloud. This is volume weighted, right? So it was looking like it was going to break into an uptrend for just a day. Then it broke right back into the cloud. So I think the path of least resistance is probably getting pulled down to this point of control. And that's going to be, right around 32.36. So I'd be careful with this one. I don't think it looks terrible per se, but it has no trend health. And this is based off of the semiconductors, right? So let's look at this the other way. Let's look at this with SMH. SMH is in the cloud, and so that gives us a similar look. It is trendless, but it is showing some support at the bottom of the cloud. It didn't want to break into a downtrend either. So I'd say this one, it is looking pretty precarious. You can see how it's sort of interacting with this trend line as resistance right now. The implied open puts us above that trend line, so we'll have to see how it trades today. I'd be somewhat cautious being aggressive shorting semiconductors here, just because there is still a lot of event risk with the earnings season and how many moving parts could change people's
Exxon
views.
sees long-term demand for oil and natural gas continuing.
So I would just be looking at that as, I wouldn't necessarily be fading it too aggressively here. I would want to see SMH closing below the cloud, particularly on a weekly basis, to get a sense that there's a more well-defined downtrend. Now, if we reject this trend line and we start pushing lower today, that would also give me a sense that maybe we have some more room. But I really need to see us push below the cloud, because that's going to tell me from a number of different vantage points that we're now entering a downtrend for this. So I think it's a little early to short semis, but I understand where your mind's at on this one, and certainly this one could be one that plays out later out. I just think it needs a little more time to work that negative trend reversal. And you're welcome. Really appreciate everyone's questions here. Happy to address any others that folks have. Boeing, I see Boeing on the list. Sorry, I did not recognize that one earlier. Going to put that one on screen. All right, Boeing. Oof. That's my initial reaction to the chart. That's a technical term. Oof. Just so you know. Okay. But no, in all seriousness, this chart looks relatively poor, in the sense that this is a company that has serious troubles in a lot of different ways. It's not just the stock chart. The company itself is in trouble. We've all seen the headlines. We've seen that more and more, their customers are losing trust in them. Now, at some point, is this company going to bottom and make a big move higher? Yeah, it's absolutely possible it could happen at some point. But right now, it's looking precarious here, right? We have these multiple different indicators on the weekly. We're below the point of control. We're below the Ichimoku cloud. So on a weekly basis, we are in a downtrend. We do have this area of potential support right here, right? Kind of where it bottomed before. You've got an area there that that it could kind of balance on and try to push higher. So we're going to be watching that 167.73, 171.49 level. If we can balance there, maybe we get a push back up, and that push back up would probably take us to the point of control, just based on how this tends to trade, how it tends to transact. That's what I would be looking for in that type of situation. On the other side of it, however, if we can't balance here and make a push higher, I don't see any reason why this stock can't move back to its 2022 lows. So Boeing, like a lot of other stocks right now we've been looking at, it's at this inflection point. The weekly close is going to be pretty important to this one. Right now, it's kind of in no man's land. So I wouldn't have a strong long or short bias. I want to see if we're able to push back above this key level of potential resistance here, which could become support, or if we break below it. Either way, though, it kind of sets us up for a volatile outcome. So maybe the way to play Boeing is a straddle, because it looks like either way it could move in a big way, but there's no clear directionality in the short term. So I'd be looking at that as a potential way to play Boeing with an option straddle of taking advantage of volatility in either direction. So hopefully that's helpful for you on Boeing. So folks, as we go through this, let me know if you have any other areas that you'd like for me to look at. We're just about 5 minutes away from the cash open on the S&P 500. We're trading at 51.16 prior to the open, which implies a gain of 0.7% on S&P cash. We're also trading up in the NASDAQ with an implied gain of 0.92% on the NASDAQ 100 cash index on open. Now, the fun with economic data isn't quite over yet. The University of Michigan sentiment reading will be coming in at 10 a.m. along with 1- and 5-year inflation expectations. Apple is strengthening their supply chain in China while growing their presence in Southeast Asia and India, even adding operations to Vietnam. And in case you missed it earlier, Wall Street Journal's Fed whisperer, Nikki Leaks, or Nikki Tamaros, is saying the dream of Fed rate cuts is slipping away, and today's PCE data does not change that. Traders of U.S. rate futures Fed swaps contract a firmer chance that the Fed will deliver its first rate cut in September after today's data, however. So a bit of a conflict between Nikki Leaks and Fed funds futures, but we know Fed funds futures, they're a fickle thing, aren't they? Bitcoin. Let's take a look at Bitcoin. Just got a request for that. That's been an interesting proxy for risk appetite. We're just about 1 minute away from the open. So we're just going to take a quick look here at Bitcoin. Give me just one moment. I'm just preparing a chart for us to see here. Got to draw some crayon lines on it. All right, okay, so we do actually have markets getting ready to open, seeing a bit of a drawdown ahead of that open in the S&P. So I just want to make sure y'all see that on screen, falling just about 10 handles here in a matter of the last minute or so. Here's Bitcoin on screen.
S&P
According to a
futures moving
statement,
sharply
White
lower
House's
here.
Brainard says
Also
we
seeing
work to
some
bring
movement lower
costs
in
down,
Apple.
and they're on.
Yeah, so we did see that. I'm just going to go ahead and talk about Bitcoin real quick here as requested. So this is an area that's pretty important. We can see that it's an area that has marked highs in the past. Now, we did make new all-time highs in Bitcoin, but I wouldn't say we're necessarily out of the woods here with the way it's trading recently. And I think that the area it's trading under right now does suggest we could have eventually this retrace lower to another area of intense interest around 55,525. That's kind of what I'd be looking for if we see continuation lower. If we can move above this current level, if we can kind of, have this be a head fake look below, then I would see going back up and retesting, this next level, this 69,120 level as being the logical conclusion. So I think there's more downside than upside risk short term in Bitcoin, looking at how it's trading right now, and also how we're seeing financial conditions tighten, liquidity becoming a little bit more
So
scarce.
looking now to the market on open imbalance, 100 million to the sell side.
So I would just be looking at this one with a little bit of caution here with the way it's trading. I think the path of least resistance may be lower. This looks similar to some of the ways that Bitcoin has topped in the past. I know that's a bold call. I'm not calling for a longer term top, but we could see some consolidation and potentially a corrective move lower. Yeah, thank you for tuning in. I think you're asking higher interest rates could drive traders to gold and bonds, you think? I think it's an interesting question. I think I would contextualize it by looking at the difference between real rates and nominal rates. With real rates on the rise, I think we would see gold come down. So if real rates came up significantly, I think that would harm gold, because so far real rates have been somewhat tame, and that's allowed gold to remain somewhat buoyant. There's also been a demand because of increasing uncertainty. Now, I will contextualize this by saying I look at gold as a hedge against uncertainty,
It's
not
seeing the
inflation.
shares of Alphabet rising at 12%, adding $230 billion in market value following its earnings print last night. Microsoft as well, adding 3.5% at the open. That's their biggest gain so far since October.
So I would be more inclined to say higher rates, if they're higher real rates, can scare people out of gold. And higher real rates would imply that you're seeing either, bond yields moving higher, inflation moving lower, or both. It would more likely to me be bond yields moving higher than inflation moving lower based on the kind of data we're seeing. So if that take is correct, it would also push people out of bonds, particularly on the longer end, right? The 10s, 20s, and 30s could fall in that environment. So I would be concerned about higher real rates. Higher nominal rates would also imply that folks are exiting, but there is a point at which this debt does become attractive. Now, I'd like to just talk a little bit about term premium. If I can buy a 30-day bill and get a better yield than I'm getting on a 30-year bond, and I'm taking a whole heck of a lot more risk on that 30-year bond because I have to hold it for 30 years or sell it and hope that I don't take a loss. But if rates are moving higher, I will. So I still feel like the lack of the term premium on the longer end of the yield curve, or the lack of an appreciably higher yield to compensate you for the risk you're taking, means I don't want to touch the 10s, 20s, or 30s. I don't see them as an opportunity here. As long as inflationary pressure is sticky, I think the long end can continue to stay at elevated rates, and I wouldn't be particularly surprised.
Mass says we are open to ceasefire ideas and sticks to the main demands outlined by the group.
I would be not too surprised to see the 10-year trading up to 5%, just based on everything we're seeing. So I'd say, maybe up at that level, you start to see more appetite for that longer duration issuance. But at current yields, I'm not particularly interested in the longer end of the yield curve because there's still not a term premium there. There's still no reason for me to want to take risk for that long period of time, because even if I buy a 10-year note at an auction, I've got to commit myself to holding it for 10 years, locking up that capital at like 4.7%, where there could be better opportunities, or I could just be parked in bills and earning in excess of 5% and then have less tie-up time for that capital. Because for me, I look at cost in a number of different ways. There's obviously cost in the terms of money, right? You pay something or you take a loss, that money is no longer in your account. There's also cost in the term of time, right? What opportunities do you miss if you're tied up in something else? That's the opportunity cost. So that's the other reason I'm not too bullish on the long end of the yield curve, because what opportunities do we miss that could deliver in excess of 4.7% annualized returns? And then if we have to get out of that 10-year, what price are we going to be able to sell it at if the 10-year is trading at 5 or in excess of 5%? We'll obviously have to take a capital loss on it if we have to get out of it early and rates are appreciably higher. So I'd say for me, I'm more interested in short-term exposure to bills. That's where I have my fixed income exposure right now. I also have some tax-free municipals. I have some dividend-producing stocks, utilities, defense contractors, industrials. That's where I'm focusing on income production. They're easier to trade. They're more liquid. And then, once it comes time for me to extend my duration and look at, these 10, 20, 30-year maturities, that's going to be when there's an appreciable term premium for those. And I think they'll be trading at higher interest rates. So hopefully that helps to provide a little bit more thoughts.
Yes, iceberg alert. Del 1000.
On where I am on that.
FCUV Focus Universal announces board approval for spinoff of Lusher, Foxtrot Charlie Uniform Victor, FCUV.
All right, so let's talk about some of the options activity we're seeing today. It is, again, a day where calls are outpacing puts on unusual size pretty significantly in individual stocks and ETFs. That tends to be overall constructive for the market. That was one thing we saw yesterday that helped to lead to the reversal that we talked about and followed through on. And we do see demand for NVIDIA 850s coming through for this week. I'm just going to add... going to take a couple of bits of information, just optimize my view here. So just give me 1 second here. So NVIDIA 840 is targeted May 3rd expiration, about 469,000 in premium paid for those. You also see TripAdvisor trip calls for June 21st, 211,000 premium paid for the 27s. And some hedging flows in SPY Got about 600,000 in premium paid for those 490 puts expiring between May 17th and June 21st.
Yes, LA Tesla shares moving higher now. A few minutes after the open, Tango Sandy Lima Alpha moving above that 170 level over the last few minutes.
We've got Tesla on screen here. We can see that move, chewing through some of that resting overhead liquidity here after consolidating.
Yes, iceberg alert. Del 1041.
All right, we're going to move over to some of these other stocks trading post earnings. We've got Microsoft here giving back some of those gains, slipping after the market open. Google, the opposite. Look, had a slip from the open, but now starting to rebuild. Seeing a push higher off of those lows, rejecting some of that resting liquidity around 171.50. Intel continuing to slip lower. Really just no love for this one. Down to $30.70. Ouch. That is not a pretty look for this stock. It's down 12.32%. Intel down 12.32%.
Market value tops $2 trillion on an intraday basis. That's Golf Oscar Oscar Golf, Golf Oscar Oscar Golf Lima. Futures moving higher over the last few minutes, up 0.7% at 51.1975.
Uber 70s, 333,000 in premium paid for those. Those are expiring Jan 16, 2026. Some leaps in Uber at 70. And we see liquidity really building here in the S&P 500 futures contract. This is a more liquid order book, 52,000 depth on this today. IBM, been asked to look at the chart for this one. It took a bit of a hit after their earnings and the announcement they were buying HashiCorp, but it's also had pretty nice run. Let's take a look at the chart for IBM here. Give me a moment to get it all sorted out.
So seeing from a reporter for Axios via Twitter here on Israel, apparently Israel made it clear to Egypt in talks with the Egyptian intelligence delegation that visited the country today that Israel is willing to give one last chance to reach a hostage deal, but if there is no progress, it will go to Rafah. Again, this is according to an Israeli senior official being cited by a news source on Twitter.
All right, so here's a chart of IBM on screen. We can see that IBM did what I suspect Meta may still do. It filled this gap, right? You had that gap up on IBM. We filled that gap to the downside. This was an area where there wasn't any transacting. So, often is the case, those are pretty volatile areas, both on the up and down. No real transacting between 178.99 and 172.54. So it wasn't too big of a surprise to see it slip right through that area. I wouldn't be too surprised to see price get pulled a bit lower here as this resolves, just given everything in this reset of momentum that's happened in the stock, because it's hard to say we're still in a uptrend here. We pretty much broke that uptrend line as we slipped into the cloud. No coincidence there. That told us we were now in neutral momentum territory. And then as we broke below the cloud, we're now in negative momentum territory. So my thinking on IBM would be that we could trace back down to about 158.71. And that would be an area where potentially we get a bit of a bid back to that lower end of the gap down range around 171.03 to 172.54. So let me know if that helps with IBM. I think that there's still potentially room to the downside here. They are engaging in a pretty expensive acquisition of HashiCorp, so that tends to get folks a little bit more concerned about that M&A. Often is the case that acquisitions are not accretive, and so it'll be on the management of IBM to show they can really turn this into something that will integrate well with their company and their culture. So for now, probably get a bit more of a drop on IBM, maybe about $6 more bucks, $7 more bucks or so. But from there, we could see a rebid higher. This is a pretty well defended area of support. You're welcome.
So according to LSEG, S&P 500's Q1 earnings growth now seen at 5.6% year over year. That's up from 4.3% that was seen on Thursday.
Zachary asks, best books to learn about economics and the stock market. Zachary, I want you to start with one book first. Reminiscences of a Stock Operator. You can find it free online. It's loosely based on Jesse Livermore's life, his ups, his downs. I think every trader should read this book first. So read this book, come back to the feed when you have, share your thoughts, and then I'll give you another book to read. Reminiscences of a Stock Operator. That's the book that I suggest starting off with. Coming up at 10 a.m., we have University of Michigan sentiment final and 1 and 5 year inflation expectations. Forecast of 77.9, prior 77.9. 1 year inflation expectation expected 3.1%, prior was 3.1. And 5 year inflation expectation forecast 3% with a prior of 3%. Looking at the market heat map today, we can see that Google, Microsoft, Amazon, Nvidia kind of leading the charge, but there is some weakness elsewhere. Particularly noteworthy weakness in energy. Exxon down 3%. Intel down 11.69%. So this is a mixed bag today so far. Even though the markets are bid up at the index level, it is a bit of a narrow bid. Only 55% of stocks that are listed in the US are advancing versus 31.3% that are declining. Got a question here. What do you think of a regime change for central bank policy with the BOJ imminently raising rates and potentially causing a global liquidity shock? Will the Fed or ECB be forced to cut as BOJ tightens? I don't think they're going to. I think the BOJ will talk a big game because they need to try to support the yen. But I don't think that they are able to raise rates such that they could cause any kind of massive unwind of the carry trade.
In 10 minutes' time now, at the top of the hour, we see the release of the University of Michigan sentiment final for the month of April. Forecast 77.9 on the prior 77.9. The 1 year inflation final forecast at 3.1% from the prior 3.1%. 5 year inflation at 3% forecast on the prior 3% as well. Expectations forecast at 77.1 on the prior 77, and conditions forecast at 79.1 on the prior 79.3.
We are seeing a bit of a bid coming into S&P 500 futures here. And we are seeing the options levels starting to print for the flows from my advanced SPX options visualizer. You can see that most active call targeting about 5160 on S&P futures, with the second most active call just below it. And that most active put targeting around 5035. And Johnny, I wanted to expand a little bit on that point for you. So hopefully you're still tuned in. Bank of Japan owns over 50% of the Japanese government's debt. The Japanese 10-year trades for around 1%. And the other buyers of that are Japanese institutions and retirees. But, if you think about it from a foreign investor perspective, if you want to buy that debt, you've got to hedge your risk in the yen, which is going to diminish your return. And then, you're going to have to deal with a 1% rate of return on a 10-year duration of exposure, which makes no sense, right? If the yen is continuing to depreciate and the risk of a Japanese sovereign issue is over 1%, because the traditional mechanism for looking at interest on debt is to calculate what the default risk is and then also take a premium. I think the default risk for Japan is probably over 1% over a 10-year time horizon. Not saying it's a likely event, but it's over 1%. So I don't think we're paying ourselves well. So there's no reason for a foreign investor to buy Japanese debt. And that means that the appetite is limited. Meanwhile, the Japanese debt to GDP ratio is about 260%. Also, the Japanese government owns about 55% of the Bank of Japan. So it's not exactly a separate entity. It's really a bit of an Ouroboros. It's hard to tell where one begins and the other ends. So I would say that the Bank of Japan can talk a tough game. They can talk about tightening. They can talk about, reducing support. I don't think they'll be able to do any of it. I think the market readily agrees with me, seeing the kind of price action we've had in the yen. So I would look at that as more currency support than actual policy changes. I don't think a liquidity crisis will start because of the Bank of Japan, because remember, the negative impact would be most realized in Japan. And they can't afford that, particularly after the kind of progress they've made. So I think they'll talk a tough game, but I think they'll deliver very little. Hopefully that helps. Let's go ahead and check around the market, see what else is going on here. NASDAQ also building above this point of control and view app, really testing those levels and pushing higher here with some degree of conviction from buyers. You can see that with those larger delta bubbles showing buyers exceeding sellers by a reasonable margin. And Russell also showing a similar look, which tells me rates are probably moving lower overall today. And yes, they are. Look at that bid in the 10-year.
So in
That's
5 minutes
showing
time
you
now at the
insane.
top of the hour, we see the release of the University of Michigan April final reads. Sentiment, the forecast is 77.9 on the prior 77.9, with a range of 78.3 to 74.3 expected. 1-year inflation expectations, forecast 3.1% from the prior 3.1%. 5-year inflation, forecast at 3% on the prior 3%. The expectations forecast at 77.1 on the prior 77, and the conditions final forecast at 79.1 on the prior 79.3.
Yeah, thank you so much. S&P 500 quarter one earnings growth now seen at 5.6% year over year, up from 4.3% on Thursday.
One minute remaining. I'll lead with the University of Michigan sentiment final. Ten seconds. $77.2, 77.2, that's lower than forecast, 77.9. 1 year inflation final at 3.2%, 3.2%, higher than forecast, 3.1%. The 5 year inflation unchanged at 3%, 3%. University of Michigan expectations at 76, 76, lower than forecast, 77.1. And conditions at 79, 79, lower than forecast, 79.1. So noticing some slight strength in the dollar following this. Again, noteworthy U.S. University of Michigan 1 year inflation
Michigan
final
final April consumer sentiment at 77.2 versus the 77.9 estimate. Still waiting on the Dallas Fed PCE for March.
We have posted out the University of Michigan April final report on the feed for anyone interested.
EOOG, Google shares moving lower. Still up 9.4%, but seeing some session lows at 172.83.
Ticker SBFM, Sandy Bravo, Foxtrot, Michael, share seeing a spike in activity, new highs for SBFM.
Consumer sentiment continued to plateau and was virtually unchanged for the third month in a row. Since January, sentiment has remained remarkably stable within a narrow 2.5% index range, well under 4.8 points necessary for a statistically significant difference in readings.
Seen a report that Russia attacks Ukraine's rail lines to disrupt supply of U.S. arms.
On ticker DJT Delta Juliet Tango, share seeing an increase of activity and new highs with DJT.
The ultimate pump and dump stock, DJT.
On ticker Nvidia, share seeing continued activity, new highs on Nvidia. I'll take a BOF, Bravo, Oscar, Foxtrot. Share seeing a spike in activity, new highs for BOF.
And we are just nearing that gamma flip level. Pushing above this on a closing basis would take us into positive gamma territory into next week, which could help to diminish some of that intraday realized volatility that we've been seeing. Our naive model shows the gamma flip level just being challenged now. Pushing above it would help to reduce volatility because we'd see dealers become buyers of dips and sellers of rips, whereas it is the opposite in a negative gamma environment. We also continue to see liquidity building above us in the S&P. Overall, a bullish look for this market, with that warm call implying an upside move of potentially up to 51.54 ES.
I know it's a Paramount PARA. It's New York Times reporting Matrix Asset Advisors has sent a letter to Paramount's board. It says, in our opinion, the go to loan stay, the course option would be better to shareholders than the sweetheart deal with Skydance.
Market internals are improving now. Breadth of 71.9% advancers versus 20.2% decliners.
Watching semiconductor stocks, seeing AMD, Micron, and some ETFs moving higher along with NVIDIA.
US stocks extend gains, Nasdaq up 2%.
I figured Tesla TSLA coming from The Verge. Tesla's autopilot and full self-driving linked to hundreds of crashes, dozens of deaths. Coming from NHTSA. Found that Tesla's driver assistance features are insufficient at keeping drivers engaged in the task of driving, which can often have fatal results.
Well, that seems extremely bullish for Tesla, right? Sure you can sense my sarcasm.
TSLA Tesla, The Verge out with the report. Tesla's autopilot and full self-driving linked to hundreds of crashes and dozens of deaths.
Circulation's the report now.
Tango Sandy Lima Alpha, TSLA, shares down 0.6% for the day.
Taking a look at the Fear and Greed Index, 42 out of 100 equaling fear, and the Crypto Fear and Greed Index, 70 out of 100 equaling greed. And taking a look at the VIX, currently down 0.91% at 15.24.
That report on Tesla full self-driving not really having too much of an impact on stock prices here, just about $1 drop since it posted.
Noting some sudden downside in dollar yen, still up 0.81% at 156.9.
So far, we're seeing prices move away from that gamma flip level and that large offered area of liquidity above on S&P futures.
So Citigroup changes their Fed call to 100 basis points of cuts this year from July.
IBM and the Government of Canada, Government of Quebec signed agreement to strengthen Canada's semiconductor industry to invest 187 million Canadian to progress expansion of chip package.
Roku warned about increasing streaming competition. The stock is down just about 10% during trading today. pretty choppy trading here as we seem to be struggling to get above this key level and stay above it, which is S&P 500 index level of 5,100, where there's the largest area of call positioning on the chain near spot, and that typically acts a bit like a ceiling. And this is also where the most active call strike is transacting, so we can see we're kind of interacting with that level. Just above that is the gamma flip level from our naive model. I posted a few charts on Twitter. You all are welcome to take a look at that to get a better idea of what all is going into this and what the exposure looks like.
We're seeing the yen now weakening to 157 to the dollar.
I'll take your SFWL, Sandy Foxtrot, Whiskey Lima. Sure seeing any spike in activity, new highs, SFWL.
So once again, S&P 5100, which matches the hot call level on ES. This is an area of potential resistance. We see the point of control pulled up just above that level as well, kind of showing us that convergence. That's the largest area of call positioning near spot. It could act a bit like a ceiling, a bit like a magnet. So I would want to see price really push above there and build acceptance before I'd want to continue any bullish trades here. And it's also a little early to fade this move because we need to see some acceptance below. I'd say 5 to 7 points below before we see any kind of trend reversal. And then we get down to VWAP as the next level of support to watch. Hey, Mont. So I was asked, what am I looking at? So you're looking at a chart of the S&P 500 heat map as shown through Bookmap. It's showing you where there is both active liquidity and where there's been interest to transact. And you can see that in the heat map, the larger areas of orange and red are areas where there's larger areas of resting orders, both above and below, above being offers, below being bids. The cumulative order book or current order book, this is what's showing you where there's liquidity on both sides of the trade, right? So you can see offers in red, bids in green. And then under SVP, you can see the session volume profile where there's already been transacting. That's this middle column. And on the right side, you can see the advanced SPX options visualizer. This takes over 10,000 different options on the S&P 500 chain from CBOE, looks at all of the transactional data and all of the positioning, and redraws these levels on a minute-by-minute basis based on how they update. So that's kind of what you're looking at. If you have any questions about it, and anyone that's watching this, if you have any questions, or if there's anything you'd like me to look into, stocks, ETFs, futures, otherwise, let me know. And all questions are welcome. Now, this is a stream that is always live on the Traderade Discord. We've got the S&P 500 and NASDAQ futures contracts, and the S&P 500 includes the advanced SPX options visualizer on our Discord. You can also get that as a separate plugin if you're interested at the Bookmap Marketplace. It is specifically for the ES or S&P 500 contract and DX feed or Rhythmic. I have it built out for both. And if you like Bookmap, you like what you're seeing on screen, you get up to 40% off visiting traderade.com/bookmap. That's traderade.com/bookmap. If you want to learn more about the options visualizer, check out traderade.com/SPX. And for folks that are interested in Traderade itself, you get up to 20% off signing up for a limited time using the coupon code Mayhem20. That's Mayhem20. So right now we have a market that has probably reached the top end of today's rally, around 5,100 on S&P, where there's a large level of calls. That open interest can act a bit like a magnet, but also like resistance there. So it wouldn't be too surprising if we don't see a further push above there and build acceptance really into this area of resting liquidity at 50.40 and above, that this could be the extent of the upward move today. We are through most of the event volatility catalysts for the day as well. We got PCE, we got consumer sentiment, we got inflation expectations. We do have a Chevron earnings call apparently scheduled for around 11. That probably won't be a market moving event, but that's really the majority of what was scheduled for today. And it's already largely behind us, as are all of those pre-market earnings, of course. So a lot of the event vol risk behind us. Wasn't a particularly well-hedged market going into today. A lot of the positive reaction has to do more with the earnings and that positivity, that reversal from Meta, and really Meta walking away from their year of efficiency, but Google doing the opposite, making it clear it's their year of efficiency, and that's been well received, as well as the impressive growth in their cloud and their talk about building AI into more products, but not spending like a drunken sailor, also well received by the market in contrast to Meta. So I was asked, do I use the order book stat in the top right to estimate any potential moves in futures? I've seen large negative values and would expect to sell off, but the market just sits. No, I don't. That metric is built into Bookmap. No matter what you're viewing, you're going to have that kind of delta on the order book. But I wouldn't say that that is a signal that I would implicitly rely on for near-term market moves. So it's more just showing the balance, right? I would look more towards things like icebergs and stops to get a sense as to where there's interest and where there's exhaustion, respectively. You know, icebergs going positive, especially if they're buying dips, that usually tells you you're nearing the end of a downward move. Stops getting blown out to the upside significantly, like seeing 1,000+ stops to the upside, typically tells you you're in a bit of an exhaustive upward move. So those are, and you can inverse that, obviously. You know, iceberg selling into strength could be the end of an upward move. Stops getting blown out to this downside a big way could be the end of an exhaustive downward move. So I like to look at those indicators a little bit more. They're lower frequency than the order book in terms of how they update, because it's based more on that flow. But I just like to have that information, that context available when I'm looking at the market. You know, knowing what the order book delta is at least helpful, but I'm not going to make a trading decision in that on that data point in isolation. Hopefully that helps. Yeah, you're welcome. It's a great question. Folks, for whatever you're seeing on screen, whatever you're hearing in the news, whatever's going on in the markets, if you have questions, let me know. You know, I'm a student of the markets just like you all. I'm always here to learn. I'm here to share my knowledge. That's what I'm all about. That's what Traderade is all about. That's why I do what I do, because I love to teach. I love to learn. Very passionate about finance. Believe it or not, I've been in this market for 19 years. Since 2005, I've been trading my own money. So, you know, to have that long of a survival rate and to be doing considerably well, particularly as I got my bearings in trading, I feel like I do have a lot to share. And I think it can be helpful for folks that are trying to expand their horizons and take a slightly different approach. Now, I will say my approach may not be the best one for you, right? You may find your personality and what works for you may be different than me, and that's fine. Everyone's different. We should lean into our strengths. We should be cognizant of our weaknesses. We should figure out what type of trading strategies and regimes work well for us, right? But that doesn't mean you can't learn from other people that have experience, including me, and that might teach you lessons that help you to save yourself from some of the pain you may otherwise experience. So that's kind of what it's all about. Hey, BW, you're welcome. BW says, I appreciate you sharing your knowledge and asks, do you prefer equities, futures,
H2Z
or options? I would say it depends
inside
on what I'm
EVs
trading and why I'm
reporting
trading
starts
it.
to sell off even
Each
more
one has
EVs as
potential
depreciation
advantages and
losses mount.
disadvantages. For example, if you're trading futures, your capital gains are going to be treated a little bit more preferably on a short-term basis. That 60-40 tax rate tends to be a little bit better. You also are not, if you're in the US, and this is all speaking from US. So if you're not in the US, you can ignore everything I'm saying unless your tax regime is the same. I can only speak to the tax regime I'm familiar with. So hopefully that helps. But if you're in the US, you don't have to worry about that wash sale restriction in futures, right? If you take a loss in futures, and in the next 30 days, you trade that same contract, that does not apply. Okay. That applies in equities. It can apply in options that are substantially similar to the equities that you're trading. So the advantage of futures is also it's trading basically 23 hours a day. A lot of these contracts like equity, futures contracts, commodities, bonds, things like that. So you do have overall, if your account is large enough, lower risk because you can take stop outs during times that are overnight trading that other people may not. So you can get out of that position if it's exceeding your risk threshold. Individual stocks are like the exact opposite of that. There's unlimited risk. There's a narrower window of trading. I know Nicey is talking about going 24 hours a day. In many ways, I kind of hope they don't. I don't think that's going to be good for the mental health of a lot of people, quite frankly. But the biggest disadvantage of equities of single stocks is that you have no defined risk on the left or right tail, particularly during
Ticker
earnings season.
ELWS, Echo
Right? You can
Lima,
wake up and
Whiskey,
your
Sandy,
stock,
sure
if
seeing
it,
any spike
especially
in
if it's not a
activity, new
mature
highs,
company, could be
ELWS.
down 20, 30, 40, 50%. Right? How do you guard that with a stop? You can't, because it could gap well below your stop and you're going to take whatever price the market's going to give you. So I would say that I like futures in the sense that they tend to be a little bit,
on the day.
I mean, depending on what you're trading.
for
Right? I'm
CME
talking
sell
about
at
index,
51.35
key commodity
across
futures,
500.
key bond and treasury futures. They tend to be a bit more liquid. So I like that. I like the availability. I like the preferred tax treatment. So I do transact a lot in futures, depending on what kind of views I'm expressing. On the other side of it, there are always opportunities for options and stocks. For stocks, personally, I like to use them more as long-term investments in swing trade vehicles than day trades. So I'll express more day trades and swing trades in futures. I'll express more swing trades and investments in stocks. And options, I also like, depending on what I'm trying to do. There's a lot of advantages to using options. One of the biggest advantages is you're putting less capital at risk in a lot of these scenarios, particularly if you're running spreads. So I don't typically just like buying puts or calls unless I'm just doing hedges. Like I have some hedges on with, VIX calls and SPX puts from much higher levels where the market was trading. Those hedges are still working. Those are the kind of hedges I'll do without spread sometimes if the premium is low enough. And indeed, in both of those, it was quite low. But then when you talk about like, how am I going to express a bullish view on, let's say, industrials or materials or metals and mining? Well, one way I may do that is a vertical spread, right? I might look at selling a call that's maybe 10% out of the money and buying a call that's maybe 9% out of the money, running that vertical spread maybe 3 to 6 months out as a way of expressing a bullish view and having a lower overall debit. Right. And that makes it so if I want to roll that position forward, it also reduces the total cost of doing so. It gives me a little bit of a buffer. So for me, it really depends on what kind of trade I'm trying to express. The other thing about equities is there's a lot of equities out there, both ETFs and stocks, where their options markets are not liquid, where the market making is pretty sparse. And as a result, you're not going to get the kind of fills. You're going to get slippage. You're going to have a lot more risk as a result of that. I don't want to trade those options. I'm not going to trade options that are illiquid. Just not something I do, right? I've done it in the past and, sometimes it works out, sometimes it doesn't, but the probabilities of it working out are much lower because of that illiquidity. So for me, it's more situational as to what I like to trade. What kind of trade am I expressing? What gives me the best ability to express that view with the lowest amount of implied risk? That's kind of what I'm leaning into a lot of the time. Single stocks I see as the highest risk area overall, simply because, there's unlimited upside and obviously they can go all the way down to zero. So you can, if you're expressing any leverage in that view, either way, long or short, you have a lot more risk on. So when I'm trading single stocks, I tend to take smaller positions so I can govern that risk. And I tend to, where it's available to do so, prefer using options so they can further mitigate that total cost of expressing a view. Hopefully that helps. If you have any follow-up, let me know.
SBUX, Starbucks, and Workers United this week conducted contract
So I've
bargaining
got a question
over
in
a
the
2-day
YouTube. How
session
can
in
one use
Atlanta.
Bookmap to get an idea of where price may
Sandy
move?
Bravo Uniform
So there's several
X-ray,
ways that you can
SBUX.
get an idea of where price may move. You know, one of the reasons I built in the SPX options visualizer add-on was to get an idea of where the options market is expressing interest in the S&P 500, because if you think about it, S&P 500 options, as index options, trade $1.2 trillion a day of notional. The entire futures complex trades about 400 billion of notional. So the tail really wags the dog. Knowing what options are doing is one key area I watch, and we could see we're kind of getting stuck around this hot call level, which is also now where the point of control has moved to, right? So where people are expressing interest in options tends to be one of the mechanisms that moves the market. The other is liquidity. So overhead, we can see a bit of a death cloud look. We have a lot on offer. The onus is now on buyers to be able to push through this liquidity, showing they have sufficient demand to do so. If they did push through that liquidity, we're pushing well above that 5,100 level on S&P index options, and that would tell us we have more room to move higher. And I would be looking at this warm call that correlates with 51.55, that large area offer, that 289 on offer, as a potential upside target from that move. So for me, the way I use this, it's a little bit of nuance, but I'm looking at resting liquidity. I'm looking at where there's options positioning and where there's transacting. And then I'm also looking at the session volume profile to get a sense as to where previous transactions are. And in a naive view, you could say, okay, if you start to move, above this large area of liquidity, you've got buyers more on sides, right? You can see a lot of buyers have been buying here and below, and you also have sellers more offsides. So they'd have to be covering shorts into that more aggressively. So I like to combine all those views, and then I also like to look at the icebergs and stops for major moves. Like you could see there was a iceberg sell into a little bit of a exhaustive stop move here. So that kind of capped the rally so far. You had 500 passive sells of S&P 500 futures contracts and 290 shorts contracts stopped out with a buy. So all that put together is kind of the universe of information that I use for Bookmap. It's not just one data point. It's more about convergences. For folks that are more curious about how I use Bookmap, please tune in every Tuesday at 9 a.m. I am an official partner with Bookmap and working with them for over 2 years. I love the product. I use it every day, as you can see, but I talk a lot more about how I use it every Tuesday at 9 a.m. Eastern. So hopefully this is a good intro, and I'm happy to talk about it more as I do my next Bookmap stream. Jack asks, do I put any value on seeing UVXY hitting its intraday highs while SPX is still at highs as a negative? Yeah, it's an interesting question. What you're seeing in vol land. Let me just take a look at a chart here. So, the thing about the VIX that I think gets maybe not the level of appreciation that it needs is that the VIX is not a fear index. It's not at all a fear index, actually. And I'm saying this to the broader audience because I know the media always loves to call it a fear index. It's all about panic, blah, blah, blah. It's not at all that. It's about implied volatility. And implied volatility is a measure of future price uncertainty. So the VIX is looking out 30 days and saying, what level of uncertainty do we have for prices, both up and down, over the next 30 days? And the higher the VIX moves, the greater the implied uncertainty about future pricing. So when the VIX is moving up with the market, what that's typically telling you is there's more interest in calls than in puts. That's where the premium chase is happening at the index level. So I do look at that typically as being a bit of a bad omen, especially in a market that is not well hedged. You don't typically want to see the two moving in tandem. Been asked, is there any way to know what the QRA or the quarterly refunding announcement would be? Or do we just have to sit and wait? This is a great question because we do have to kind of look forward to that. There's no way to really know what it will be in advance, but we can at least take into consideration some of the moving parts here. And we can say, in all likelihood, this is a treasury that continues to put a lot more of their issuance into bills. We've seen that as a trend. And as long as they're soaking up bank reserves and reverse repo liquidity, I think they'll issue more in bills than notes and bonds. This is also a government that has yet to have a formal budget. We haven't had a budget for 2024. We haven't passed one for 2025. And in the environment we're in right now, it doesn't seem likely we're going to. So there's a lot of uncertainty about spend, but we do know this is the largest level of deficit spend with unemployment this low as a percentage of GDP ever. So there is also an interest cost, especially if the Fed doesn't cut, of in excess of $1 trillion this year. So I think we can expect QRA will probably be larger than the last one. It'll still be focused on bills. I don't expect it's going to be a major market moving event unless there's a stronger deviation away from what the market expects here, which probably somewhat aligns with my view here. We do see S&P futures moving higher here. They were able to chew through that area of resting liquidity above, and you can see the delta bubbles growing in size, showing that conviction by buyers and putting that warm call into view as the next level where we could see some key interaction. Of course, we do have some resting liquidity overhead in several different levels. We do not have as much below. So this is also the market telling you there's interest in higher prices. Looking at the market as if it's an auction, this is telling you that there's sufficient demand and there's supply, but that supply is coming in at higher prices, which suggests that prices could move higher from here. In terms of how much liquidity do I look for, someone asks, my labels automatically start in 250 lots and above for S&P, but it's different for every contract because there's different order book depth. You can see today we've got pretty good order book depth on the S&P, about 54,000 on the entire liquidity of the S&P. This is the best liquidity we've seen in about 2 weeks on the S&P 500. So that's another sign that helps to give us a little confidence. We're pushing above that negative gamma flip level. So we're pushing back into positive gamma territory. We're seeing order book liquidity coming back in. We're seeing rates give us a little bit of a reprieve. All that suggests that volatility in terms of realized intraday volatility could come down a bit here. Do I consider purchasing ETFs? Yes, absolutely. In fact, I like ETFs and sector and industry exposure often more than individual stocks because there is a higher degree of relative safety. You don't have that, unlimited gap up, gap down risk in an entire sector the same way you do in an individual stock. There are also sector futures. They're not quite as liquid as the ETFs, but you can enjoy the advantages of futures, that 60-40 cap gains, the lack of a wash sale rule, all of that, and that overnight ability to trade. So there's also sector futures for all 11 of the S&P 500 sectors. So you've got your choice between ETFs and futures, and of course options on, ideally the ETFs, as the futures options are not very liquid. But that's another area that, I like. And for right now, since we're talking about sectors, I continue to like energy, industrials, materials, metals, and mining. I'm also still interested in aerospace and defense and utilities in terms of the sectors that I'm most interested in right now. You're welcome. Thank you so much for tuning in, and always happy to answer these questions. It's really a lot of fun for me to to go through this. And these are the kind of things also when I was a younger trader and investor that I wish I had someone answer for me. I went through this journey alone, sort of self-educating. Eventually I came into some good mentors that helped to kind of point me in the right direction, but there were years where I really didn't have that guidance and I was mostly just exploring on my own. And we're fortunate to be in a time where there's so many generous people out there that are willing to share their knowledge. And I really enjoy doing that, hoping that I can help people save some of the pain that they shouldn't have to experience if they can take in some of the lessons that the market has taught myself and others. I like to say that the market is a school. We all pay a tuition to it. That's what happens when we lose. And it's it's up to us as to whether we are heeding those lessons being taught, if we're, getting value from the tuition being paid, so to speak. Yeah, you're quite welcome. It's a lot of fun for me too, you know, coming up on 20 years in markets and learned a little bit along the way. So it's always fun to share.
Nvidia, ticker NVDA, just off the highs of the day. Shares up
Sure, yeah, we follow
5.3%.
European
That's
indices.
NVDA.
Mostly we look
November,
at
Victor,
the
Delta,
Euro
Alpha.
stocks indices. I think it's the Euro stocks 50 and 600. And then we also look at the DAX, the UK FTSE 100, the CAC 30. You know, these are indices that we look at mostly at MacroVisor. We have a weekly momentum dashboard that we share where we go through a bunch of different global markets, you know, developed markets, emerging markets, even some frontier markets, as well as a variety of commodities and currencies. So absolutely, I'm very global in terms of my focus. I think it pays to be that way. We can't just be US focused. We can't just trade like 30 stocks in the US. You know, as global investors and traders, it behooves us to have a wide kind of menu of different assets that we're willing to at least look at, if not trade, because there's also inter-market relationships to be aware of. There's, you know, areas of opportunity where there's relative strength versus relative weakness that can define good swing trades. So in short, yes, absolutely look at EU indices, mostly Euro stocks, FTSE 100 and DAX. We also look at Switzerland and Sweden as well. We recently
Turkish
added both of
official
those to the
says
dashboard.
Erdogan's planned May 9th meeting with at the White House with President Biden has been postponed.
You already finished the book? Were you the person who asked me earlier for a reading recommendation? Yeah, you're welcome. So you asked for another reading recommendation, Marcus. Can you tell me what you're interested in learning? Because, okay, that's cool. Someone else had asked me for a book, so I was just wondering. But tell me what you're interested in learning first, because I don't want to just, you know, throw a book out there and kind of like throw pasta at the wall and hope it sticks. So are you interested in learning more about trading, investing? Are you interested in learning more about technicals, fundamentals, macro? Like, kind of give me a sense as to what you're trying to learn.
Let's take our FTDR, Foxtrot, Tango, Delta, Romeo. Note circulation's the new long idea from Zach's being circulated. It's FTDR.
Seeing a bit of a pullback here in S&P futures below the point
Clear
of
zone
control and that
solutions.
most active call
IPO
strike
for
back in
today,
negative
shares open
gamma
for
territory,
trade.
just basing at VWAP.
$4 per share.
So
That's
we'll be watching this here.
ZONE, Zulu,
See if we have any further
Oxford,
reaction.
November, Echo. Shares open for trade at 401 per share. The IPO was priced at $4 per share. That's Clear Zone Solutions, ZONE.
Over in the NASDAQ, similar look here, just a bit of a pullback to now in the NASDAQ, its point of control, and it's starting to build above that. And in the Russell 2000, just above its respective VWAP. Let's take a look at rates here. Rates are starting to rise from their earlier lows, but we are still well below the levels we had pre-market. So overall, 10-year note, just giving back some of those yield gains that it had recently. Over in crude oil, we're trading at $83.60 a barrel, below the highs earlier, coming down, not able to get above that resting offer at $84.50. Over in Dr. Copper, seeing a similar look as oil, rolling over, getting rejected at that point of control after testing above and below, now sliding lower on Dr. Copper, consolidating some of those gains, still something I'm quite bullish of over the long term. And then we have gold on screen. Gold is quite similar to some of these others, rolling over from its prior highs, rejecting at that point of control, then rejecting at VWAP twice, and continuing to roll lower. Silver also off of its highs, rejected at VWAP and pulling back here. Still bullish on gold and silver. Consolidation is healthy, but I need to see gold defend its key trend line. And similar with silver, I need to see it stay above 27 bucks to continue to be bullish.
Says expects free cash flow.
The euro, which is sort of
$4
the
billion
anti-dollar as it makes up about 70% of the US dollar
TCO in
index, is pulling
2025
back here from its earlier highs. The
and
dollar
$5 billion
getting
in
a bid.
2026. That's coming from the chief
And the
financial
semiconductor
officer of
ETF, we're just going to zoom out,
CVX,
has been building
Charlie
on the day,
Victor
led by
X-ray.
NVIDIA, which makes up about 20% of the
Trump and
semiconductor
Biden news.
ETF. Apple's pulling back here a
Radio
little bit,
interview
back
with
down to VWAP
Howard Stern's. Biden says he will debate Trump.
170.42, and seeing a little bit of a bounce after selling down
President
from
Biden
its
on
intraday
interview with
highs.
Howard Stern says, "If I am elected again, we will make
And Amazon,
Roe
Apple
v.
both have
Wade
earnings
the law
next
of the
week.
land
Amazon
again."
is also pulling back a little bit from its highs, just rejecting that 178 bid and pushing
President
a
Trump,
bit higher from there.
President
Seeing
Biden says,
some
"I will
absorption
debate former
by
President Trump.
sellers.
I don't know when." That's on the interview.
Meta
with
also pulling
Howard
back
Stern.
from its highs. It seemed like it got above that area of resting liquidity at 445, but was not able to push much higher. We see that resting offer now building above. Meta then
Chevron
rejecting
CEO
its
says planning
point
to
of
start
control in VWAP,
exploration
moving
next
lower,
to massive
bouncing,
Nambia
and then
discovery in late
rejecting again from the point of
2024
control
or
here.
early 2025. That's CVX, Charlie Victor X-ray.
And Google, while it's still bid up close to 10%, it is giving back some of its earlier gains. The stock was bid up to 174.50 earlier. Microsoft, another winner from last night's earnings. A similar look, pulling back a bit from its intraday highs, also rejecting here at the point of control, and then pushing below VWAP. So we'll be watching this one. 408 looks like a potential area of support. Intel climbing off of its lows after the CEO was on Bloomberg to espouse optimistic views about the company's future. And this stock now up about $1 from its lows of the day. And NVIDIA pulling back, but this one's recovered quite nicely. We can see that it's pushed up to about 873 at its recent highs, now pulling back to VWAP and rebalancing, consolidating some of those gains. And Tesla, you know, this is a stock where some negative news came out from The Verge. The stock seems to be digesting it quite well. That news was talking about the deaths attributable to full self-driving. And the National Highway and Safety Bureau talking about how full self-driving is nowhere near ready, despite Tesla saying robo-taxis in August. Traders in Tesla seem willing to overlook that and are probably more excited about the idea of cheap EVs coming out in early 2025. And then Snapchat, one that's been on a lot of people's minds, it is still trading higher. It is up to 14.28. And this is one of those times where it pulled a miracle rabbit out of
IGC
its hat,
Pharma,
didn't
ticker
crash on earnings. And,
IGC,
you know,
India
obviously it
Golf
had pretty low
Charlie,
expectations, but
announces
nevertheless,
positive interim
Snapchat
results
tends to
for
snap,
IGC
not
81
pop.
in
This
reducing
was a different
Alzheimer's
story.
agitation.
Going back to the S&P
Results
500 here,
indicate that
see we're
IGC
rebalancing at VWAP,
81
and we have
clinically
some liquidity
reduced
building both
agitation
above and
compared to
below.
placebo. Shares up 9.7%. That's IGC, India Golf Charlie.
Hey, Mr. Tang, or Me Tang, sorry, my apologies. Could you tell me a little bit more about what asset you're talking about with regards to the London close? Are we talking about gold? Are we talking about the FTSE 100? Are we talking about something else completely? Let me know what you're talking about, and I'll do my best to answer. So there's definitely some great books on technical analysis. I was asked about some to start. So we'll start with that. I'll give you 3 books for that. The Encyclopedia of Chart Patterns by Tom Bukowski is one, published by Wiley, available on Amazon. Technical Analysis of the Financial Markets by John J. Murphy is another one. And Technical Analysis Explained by legendary Martin J. Pring, 5th edition, also available on Amazon. Those would be 3 books I'd start off with for technicals. Let me know when you've gotten through them, and we can talk about some other reading material.
Smart for Life, ticker SMFL, should see a pop to the upside, up about 14%. That's SMFL, Sandy, Michael, Foxtrot, Lima.
I've been asked what's my opinion on Jim Dalton. I think he's created a lot of great educational materials, and certainly someone who has some experience to back it up. So certainly worth reading some of that, what he's all written. Now, I will say that, you know, in terms of courses and learning about trading, I do speak from a place of bias. I do my own one-on-one and group coaching. So,
Chevron
you know, I
CEO
tend to
says
feel like
getting
I do a
better
pretty
than
good job of
expected
it, and I see Jim
Permian
is doing the same sort of stuff.
production
So
performance in
there is
first
that.
half. That's
But
CDX,
yeah, I think
Shelby,
that a lot of
Victor,
folks in this industry
Straight.
that have succeeded in learning how to basically be disciplined and
Chevron
consistent in the
says we
market,
expect
those
to
are the
exit
people
the
that
year with
win.
about
It's not
900,000
all
barrels per
about,
day
you
in
know,
Permian.
giant gains and making like a fortune in a week. Most people that do that don't survive. It's about consistently being able to have returns over long periods of time. Some of those returns are going to be very big, some of them not so much, but it's really about managing that over longer time horizons. And that comes from understanding how you're trading what you're trading, right? A lot of the biggest gains sometimes happen to people where they don't know exactly why that big gain happened. And then you try to replicate that without understanding why, and it's essentially gambling. On the other side of it, if you get a framework, a system that you can work with where you have, you know, a reasonably good win rate and where your gains are at the end of the day, your profits are exceeding your losses, and you can replicate, iterate, and build on that, that's going to deliver better results than speculation. So I think the biggest thing about trading is really understanding why you're trading what you're trading, how it trades, what type of regime you're in, where you can execute buys and sells, and then building a system on that and adhering to that system and continuing to improve it. That's the approach I favor. I don't really think emotion has much of a place in trading. I don't think that You know, it's really about also lusting for riches in the near term. A lot of the folks that claim they never lose or claim, you know, that they're like 20 years old and now they've made millions and millions of dollars and they live in some fancy property and drive a Ferrari, a lot of those people are lying, quite frankly. And the best traders out there typically never post their profits, never try to sort of embellish how good they are. They're very humble people and they're usually pretty low key. So one of the reasons that the void is filled by a lot of
IGC
very loud
Pharma
people who are
team
talking,
reports
quite
that
frankly,
news
nonsense.
was reported
Because
on
the
March
best people don't
20th.
engage in that
News
nonsense.
is not
So that, I
new.
know it's
It
a
was
little
reported on
divergence from
March
what you asked
20th
about, but
for
I just
interim
wanted to color
results
it with, I see a
for
lot of people out there on
Alzheimer's
social setting
agitation.
highly unrealistic
News
expectations
is
for
not
trading.
from today.
And those expectations are far and removed from what you can reasonably, you know, deliver consistently as an independent trader. You know, you have to be humble, especially when you're first starting out, about what your expectations are. It should be more about capital preservation than appreciation in that first, you know, year or two. And following folks that set unrealistic expectations can set you up for disaster because you can be like, well, why am I not, you know, making 700% gains on every call I
Block trade
buy?
in ticker.
Well, because that's
BA.
unrealistic. I think if you're an active trader and you're trading S&P futures and you can't beat the index, then you're not really doing it right. I know that might not be a popular view, but the reality is that you have to account for any kind of commissions, for slippage, for, you know, short-term cap gains versus long-term. And so if you're not consistently beating the index performance year over year and you're trading, say, S&P futures, then, you know, in my view, you're doing it wrong because you're realizing a higher tax rate, you have higher risk, you're putting a lot more effort into it than a sort of a long-term buy and holder, and you're also not realizing those dividend gains or the better tax treatment. So to be a really good trader in S&P, I would say you have to beat the index by 1.5 to 2x pretty consistently. That's my own 2 cents. I also think since a lot of people inherently own the S&P 500, whether, you know, you have it in your retirement, you're a passive investor, you're just a part of the global economy, you have some kind of exposure to it. This is why I like uncorrelated returns more. I like trading other assets more and pair trades and relative strength versus relative weakness, especially because that's where you can add some buffer, right? So if you're already inherently net long the S&P, finding ways to outperform the market or at least be able to deliver more uncorrelated returns to your portfolio over time, I think is a better and more realistic goal for swing traders.
Chevron says not affected by recent sanctions, but not putting new capital in Venezuela. That's Chevron from the conference call, CVX, Charlie Victor X-Ray.
Oh, sorry about that, Marcus. The last book that I recommended was Technical Analysis Explained, and I introduced the author as the legendary Martin J. Pring. Technical Analysis Explained.
Chevron's production in Venezuela increased to 180,000 barrels per day. That's coming from Chevron's CEO at the conference call, ticker CVX, Charlie Victor X-Ray. Telenova, ticker K, as in kilo. Telenova declares regular dividend of 56 cents per share for the
Yeah, that's
second
exactly
quarter
right,
and
Jim.
announces plans for dividend
Well, just give
increase
us
in
a
the
second.
third quarter. Plans to
Uh,
increase quarterly dividend to 57 cents per share beginning with Q3. That's Telenova, ticker K as in kilo.
I mean, that's exactly right. Most money managers don't outperform the index. Now, in terms of traders, that may be a different story, but I would imagine most don't outperform the index as well. But that's kind of my point, is if you're not able to outperform the index when factoring for slippage, capital gains, dividends, and otherwise, then maybe that's not the best use of your time. And there are other areas that can offer more consistent opportunities that deliver more uncorrelated returns, since most of us are passively long the S&P 500 anyway. So, looking at commodities, looking at bonds, looking at currencies, looking at sectors, I find swing trading and swing trading pairs to be an area where you can maximize that potential to beat the index. And an example of that was my long Japan, it was hedged, HEWJ, long, and short China last year. Put that trade on twice. Both times it handily outperformed the market over the same time period. We're talking about VTI or SPY or QQQ. that's where, it makes sense. That's where you're able to deliver uncorrelated positive returns. And I think that, if you can do that, great. But if you're not able to do that consistently, you might want to take a second look and ask yourself, are you on the trajectory to consistently outperform the market, whatever your benchmark is? And if you're not, then, you have to ask yourself some tough questions like, am I trading the right thing? Am I trading the right way? Or do I need to modify my approach to the market? So I think it's just
MFI
important to
ticker
go into the idea of
MF
trading with measured
International ticker
expectations.
MFI.
But,
Mike
if you're not
Foxtrot
able to
India
consistently
shares halted on
outperform
circuit
whatever
breaker
your
to the
benchmark is
downside,
after you've
shares
been doing
down
this for
10%
years,
for the day.
then it's probably
That's
important to take a
MFI,
look
MF
at
International.
what you're doing. Moving over to the futures, we can see S&P 500 kind of getting stuck up above and down below this 5100 level. We see this with large areas of options positioning. Trade tends to get more choppy. It acts a bit magnetic, and there's a time period that we have to kind of sit on our hands and wait to see what the ultimate resolution is. But I will say so far, VWAP acting as a pretty key level of support, twice tested and bounced.
Google to invest $3 billion in data center campuses in Virginia and Indiana. That according to Bloomberg.
Just doing a quick mic test here. Dollar up around 0.5% on the day per the Dixie. As we're also keeping an eye on the dollar yen, so that was extending its gains up. So that's yen weakness at around 157.5 yen to the dollar now.
Let's take your IBRX, India Bravo Romeo X-ray. Sure, seeing any spike in activity, new highs, or IBRX. On ticker SKS, Sandy Kilo X-Ray, notes CFO of Skechers on CNBC Live TV.
So the dollar extends gains against the yen, touching 157.6 yen to the dollar now. So again, that's a new 34-year high now. It's last up 1.2%.
Continuing to see some resistance here. We see some repositioning across the options chain as well in the S&P 500. We can see now the most active put strike moving higher, as well as the second most active and most active call. In fact, that most active call looks like it's around the same area as the second most active. So we'll see that later on as we trade here. But essentially, we're just sort of caught around this 5100 level. This has been the theme, right? This huge area of options positioning. This is where we tend to get stuck, sort of mired in the mud, particularly during regular trading hours when this stuff really matters. Overnight, we can kind of hop above and below these. But I would say this kind of looking more like this is where this caps out on the day. I would say unless we really meaningfully build below above this level and take out this liquidity above and start to get back up to that warm call strike again, this looks like it's probably just going to go sideways and potentially even lower. The sideways is intact as long as we're above this point of control in VWAP. If we slip below those, building acceptance, I would say lower becomes more likely. And we start to see that some of these lower areas of interest come into view, like 5120, 5100, and even this hot put level. But on the other side of it, if we can build above this area of resting liquidity, I don't see any reason why we can't make a push up to 5150 and possibly even 5155 around where that second most active call is. So right now, market's consolidating its gains and deciding how it wants to move, and that 5100 strike on SPX is a pretty darn big magnet.
Went through Netflix and FLX. You're seeing a spike in activity. You know, Josh Brown with Dubai on Netflix. That's on CNBC.
And we are seeing some pressure now. Prices moving just back down to around 5,100 again. Again, this is a sort of magnetic level to watch for the rest of the day. We could get stuck here. We could potentially move lower or higher. I went over a couple scenarios earlier about how that may play out. But I think it behooves us here, if we're short-term trading the S&P, to at least be careful. We're at an inflection point. The market is consolidating. The longer it consolidates, the more likely it is it makes a larger move. And you could say we've been consolidating here for a good 2 hours. So however we potentially resolve from this, whether that's today or early next week, it could end up being a larger move. And the longer period of time it takes to consolidate to get there, the larger that move may be. I like to look at consolidations as sort of energy going into a coiled spring. So as the spoos become the paint drying simulator once again, let's take a look around some of the other parts of the market here. NASDAQ, similar look, sort of consolidating here for an extended period of time. Also sort of coiling up for its next move, whatever direction that may be. Russell continuing to climb from its lows. It really did find its bottom at VWAP, but overall, similar look to the other indices, really consolidating those gains. 10-year note futures are rolling over a little bit, implying rates are back on the rise. Crude oil off its lows, now trading 84.09. Up just about 0.5% today. Still bullish on oil. Still bearish on bonds and notes in terms of my overall momentum views. Copper coming off its lows and looking like it's a bit more constructive here. Copper actually putting in a pattern that starts to look more like an uptrend, right? So you had this low, and you were able to make a higher high than the last high, a higher low than the last low, another new higher high. So copper looking like it's trying to bottom here, and we'll get a better sense as to how it performs with this resting offer just above 458 and VWAP at around 457. Gold also consolidating, although this is consolidating a move lower, but gold does seem like it's basing here overall, and we do see interest building above in price. So I would be interested in seeing how this resolves. We have VWAP as a level to kind of tell us who's in control. Right now it looks like it's sellers. It's kind of trendless, but if we can push above 23.5450, I'd be interested in longs in gold up to 23.60. Silver trading at 27.2450. This is another one I'd be looking at pretty closely. I would like to see it break above VWAP, and then it could have about 1% higher from there, going back up to that next level of resistance just below the point of control on that contract. The euro continues to move lower overall, but getting a bit of a bounce in a shorter term time frame, moving up above its point of control. The dollar has a modest bid right now, just below 106, and we can see most of that is actually being provided by a weakening yen as the market continues to question the resolve of the Ministry of Finance and Bank of Japan, both of whom seem capable of jawboning, but not actually following through with anything even vaguely resembling intervention or tightening, other than moving from NERP to ZERP, but then saying, we'll keep easing, guys, don't worry about it. And then we've got the semiconductor ETF. It is consolidating, but it looks like it's starting to move into a downward trending state. So we'll be watching this one here. It is below the point of control. It does look like it's putting in a potential lower low here and a lower high. We'll see how that develops. Apple also sort of continuing this look of rolling over a bit after those post-market open gains. So this is one we should be watching to see if we get support around 170. We certainly saw resistance just around that large offer at 171. Amazon, its earnings coming up next week.
IBRX,
overall,
India Bravo Romeo X-ray shares seeing continued heavy activity, new highs. IBRX
sold pretty aggressively, but then there's just been this really consistent accumulation pattern here. This is another sort of microstructure uptrend again. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Let's see if we get another higher low. Could be an acquisition area for those who are bullish Amazon intraday, trying to get price up to that 180 resting offer, which has so far looked like a bit of resistance. And then here's Meta, everyone's stock to love or hate or just kind of comment on how weird the memes are surrounding Mark Zuckerberg right now, the bearded one being the one in question, whether real or not. Hilarious that he looked like a Gen Z TikToker that just got his first sponsorship in that video. Nevertheless, this one had a big pop after the open, sold down to a new low. Now it seems to be rebalancing below that point of control, just challenging VWAP from below and testing. And Google has had a mixed day today. It started off with a big sell down. We had that trend structure lower highs, lower lows. Then we're starting to see the potential for it kind of reversing that trend. But we're also seeing resistance to that VWAP. So we want to see the next higher high taking us above VWAP and into this 173 level of resting offer above. And I'm just going to do a little bit of re-alphabetizing for my own purposes. But here's Meta on screen. We just looked at that. We'll look at Microsoft. Microsoft seeing a little bit of resistance just where that offer was around 410, which also aligns with VWAP. So it tells you that's a pretty important level, that 410 level in Microsoft. So far rejecting there. Zooming out to get a context for the day. This one was also sold lower at the open, repeatedly tried to kind of break above back into that range and was rejected. Now it seems to be getting rejected at lower levels. So not a particularly constructive look in Microsoft here right now. Intel continuing to build from its lows here, actually filling that whole gap lower open and recovering pretty well, but still down quite a bit today. So, it might have been out of the woods of the intraday session, but from yesterday to today, the stock is still down about 8.5%. So not looking that great. I'm going to just move that over next to Google. Again, alphabetizing here. And we're going to just pop Snap off the feed after we check it, because I'll make room for other stocks in case anyone wants to look at those, but we'll cover it real quickly. First, NVIDIA. NVIDIA was one that was doing really well earlier today, had this big boost. Now it's just sort of consolidating those gains. It seems to be sort of at rest here. We saw a lot of positive flows and calls bidding up NVIDIA. Those flows have also slowed down. Tesla is the next one we have on deck. It has been a mixed day for this stock. It started off really choppy. Now it's starting to trend higher. Saw some resistance around 172 after it filled that offer. And overall, going back into a state of consolidation after that uptrend. Maybe even potentially a downtrend if we start to see a lower high forming here. We'll take a look at that later. And then Snapchat trading up to 1451.
That's Charlie
That was a
Victor
large
Sandy,
resting
CDS.
offer. It is taking that out to the upside. This one continuing to look pretty strong. So I'll keep it on the charts for now, but I'll just alphabetize it because reasons. And I'll also move semiconductors over ahead of it. All right, we're going to move back to the S&P 500 here. And we're still in the paint drying simulator 2024, just stuck around 5,100. I'll check back in shortly.
Let's take our Dawn Delta Alpha Whiskey November. Share seeing a spike in activity, new highs for DAWN.
So folks, on second thought, I'm going to pop off of the stream for now. I may join in later today, but appreciate everyone tuning in. For more streams like this, check out Traderade.com, where we help you sharpen your trading edge. You can get 20% off by using the code Mayhem20 at checkout. Also, if you like the Bookmap visualization, you can get up to 40% off using the code, visiting Traderade.com/bookmap. And the SPX options visualizer is available on the Bookmap Marketplace now. And you can check that out by going to Traderade.com/SPX. So thanks, folks, for tuning into the stream. I'll also be on the Traderade Discord continuing to stream here and there as I have commentary. So if you want to join us there, certainly welcome to. I am streaming more regularly there for our members. Thanks again, everyone, for tuning in. This has been Back to the Futures with Markets and Mayhem.